the cash crisis works. Talking about Venezuela once again.
Systemic important banks. They removed the one factor into this thing on here called monetary awareness.
All right, we are connected for the Friday edition of the news update. And as always, looking forward to connecting and sharing my 2 cents on a variety of subject matter. And it looks like more of a correction / coordinated effort to shake out a lot of small players in the papers game. And so I came across an interesting post in reference to some potential activity or advancements in the whole margins game when it comes to the COMEX and the paper futures, and the possibility of this being a last minute shakeout to remove some small hands and basically get rid of the players that are insignificant. So we're going to talk about that and a lot more. But as always, looking forward to connecting, sharing my 2 cents with you guys, and also checking in to see what's going on. So for those who are plugged in, I had a little typo on my side here. And so I'm streaming, looks like, or I have 2 streams up. But then again, hopefully you guys catch on and realize that I'm over at this one here and not at the other stream. And so I want to just get straight to the point. Let me make sure I'm streaming on all cylinders here. And I'll share with you some things that I came across, as well as my 2 cents on it. And once again, at the end of the day, all this information is after the fact. So you got to take it with a grain of salt. Nothing is official until it is confirmed after several different news sources, puts it together. But I just want to give you something to chew on today, to once again remind you, be of good courage. Everything is fine. There's a great there's a much bigger picture when you look at the disconnect between the paper and the physical. Clearly, we all know what's happening in the physical. I believe this is more of a coordinated effort in conjunction with some activity out in China that is designed to clear out some weeds so that we can get to the nitty gritty of this real price action that's coming in the days ahead. So let's move right along. So for those who are plugged in, if you have not as of yet, make sure you hit that subscription button and then tap the bell notification, click all so you'll be notified, and then drop comments if you're watching the replay or in the chat. I definitely will do a better job if I can of sharing thoughts, ideas, and suggestions from the community. And so somebody say, buy the dip. Thanks for all your great information you share. Appreciate you. Just trying to take all this information in the form of different data points, put it together, and try to help it make sense to a lot of people. So that's just my goal, is educate myself. Okay, let's jump into it. So as of now, it is nice and sunny in Metro Detroit at a mere 11 degrees. And so when the sun is shining, you got to just be grateful. Because if it's dark and cloudy, you know how it just puts a damper mood on your day. But when the sun is out, just something about the sun that just makes you feel alive. But, thank God for another opportunity to give him glory. And as always, for those who might be new, you never know. If you have not, as of now, Silver IQ, test your IQ. This is all about monetary literacy. For those that understand monetary literacy, you'll do far better than those that are just focused on financial literacy, which is information on how to basically take your fiat currency, give it to other people to take care of you, take care of it for you. That advice to me is outdated, and it will do more harm than good, in my opinion. That's why monetary literacy is key. Go test it. Links in the description. Okay, so let's just jump right into it. As always, in the midst of this world of trying to, get to a true sense of price discovery being driven by Asia, we have to deal with stuff like this. And once again, $99.45. Try to go buy some silver for $99.45. The premiums will increase tremendously. And just to paint more of a picture as to how these corrections are irrelevant, because it's all paper. It's all paper. This is not the physical world we're talking about here, people. This is all paper. Once again, go on any silver online store, try to find something that you want to buy. You won't find it for nowhere near this price. And then also think about this. We are right now at the point where the premiums, where you deal with other spot setting mechanisms, they deal with physical primarily. And I'm going to show you some things that I meant to let you know that ain't nothing changed. We're still headed towards, those $100 days, as I believe are coming as we get through this, situation we have to go through. And then, of course, you have the rumors of Kevin Walsh being the next Fed chair. And Donald Trump was supposed to tell us next week, but somehow it got leaked. And of course, all the markets are, So let me just give you some forethought. So we got a supposed leak of the next Fed chair, and we're told from the administration yesterday that by next week we'll have the information, and voila, the market's somewhat correct, and the possibility of these speculations that the COMEX have increased margins substantially is more so hush. And so they want us to believe that this correction or this whatever we're experiencing now is centered around a leak of the potential next Fed who's hawkish, which doesn't make sense because hawkish in the sense of, less QE type of narratives is deflationary. Deflationary won't help our government with our debt issues. So once again, come on now. Okay. But I'll go along with their narrative. Fine. Let's just have fun with it. So let me give you something that I think would make more sense. And so let me refresh my screen here and give it to you really looking at here. And so on the screen here, you see a variety of prices. And so in the green at the very top, let me just zoom in here. This is what we're looking at. This is, as it says here, spot price in USD terms, and it's centered around the futures. Futures right now is at $99.41. This is the paper game we're talking about right here, which gives us that other green score over there at 99.15. So from the futures, we get that over there. But if you look right here, look at Shanghai. It's at $122. And the premium, the difference between the futures set by the West and the physical set by Asia is $23. So that spread I've been talking about, it's widened. And so literally, video that I did last week talked about was there a possibility, I think it was last Friday or last Thursday or Friday, was there a possibility that this premium, this spread, the difference between the futures price in the West and the Eastern price, spot price, was decreasing because it got below $10. But long and behold, bam, here we are, $23, because literally Asia's not slowing down. They're not dealing with any of this paper crap that the West is centered around. And so once again, the true price relative to what we're approaching has more to do with what is being set out east. And then you got to bring in India. And so right now, look at India. The spot price for physical in India is 128. That's above China's. And so look at the premium, $29. So literally, you got the Western price at $99, and you got the Indian price of over 1 billion people ish. This is how they view it, 128, and that's a $29 difference. So once again, we got Shanghai and India driving us forward, but here we are in the Eastern Hemisphere talking about $98, $98.81 is what we're supposed to believe an ounce of silver is worth. So you can see you got 3 different measuring sticks. One of them is clearly broken. And what does that leave us with? What do you believe? Okay, so with that out the way, let's get into what I really want to touch on. So let me bring this to you here. Won't be before you long, but want to give it to you straight so you don't panic. Don't get caught up in this narrative just because when you have literally over 100 years of price suppression in reference to how we view silver and gold, they got a lot of work to do. They got all types of things to do. So here's a report that came out late last night, early this morning from Bei Zhongjing, if I'm saying that correctly, in reference to some activity out in China. So China, the markets started to correct earlier in the morning. And of course, I think it had a lot to do with ending the day of the Asian benchmark here. But it says here, a lot of gold and silver miner stocks hit the daily limit down. News from major Chinese banks, accumulated gold withdrawals and accumulated gold withdrawals and available for sale gold bar vaults have been reset to 0. A 1-month advance booking is required and no guarantee of specific delivery date. And so this is centered around some information provided by him, and he's done a good job of keeping the Western Hemisphere up to date. But as you can see on the screen here, we ended at 123.21, the benchmark out in Asia. And so I take that information that was just provided in reference to, I guess, the Asian markets trying to clean up some things on their end as well when it comes to the physical settlement and the accumulation of removing gold and silver from the vaults there with this narrative here. And so, once again, other than this excerpt here, this is all we have to go upon. But to this point, he's been very upfront and ahead of the game with his knowledge. So I would take it take it as is that clearly behind the surface, because demand is so high, they're literally redoing some things there. And the fact that it says here, gold bars for sale have been reset to zero, I would assume there's been a lot of shaking out of weak hands over there as well, trying to shore up, I guess, I wouldn't necessarily say the bigger players to make sure that they get what they're expected to get from these exchanges here, but that's kind of what it seems like. And the reason I mention all this because here we are now, and let me give it to you. Let me give you to this here. So let me get into what I really want to touch on, which is centered around some information that came out of X this morning. And so to verify it as best I can, I went through the thread, and whenever someone asks Grok to verify it, that is closer to truth. And Grok said that it is official. But once again, it hasn't been officially announced on the COMEX page as of yet. But we'll run with this. So here we have here. This came out 3 hours ago from Hansa, whoever. Probably just let me see here. 11,000, stacking metal, tracking lies, tweeting truth. So we'll see what he's talking about here. But here we got breaking COMEX hikes silver margins to, I don't like when I do this, to $52,000 per contract. So once again, this increase in margins of how much is needed to play in their paper games is intensifying. And ultimately what it does is shakes out weak hands and it solidifies the players that are meant to be in the game long term. So let me give you something here. It says that's $10 plus per ounce just to stay in the game on a $5,000 silver contract. It says, what does this mean? More cash required or you're forced out. Leverage gets crushed. Weak hands are liquidated. Paper liquidity dries up. It says margin hikes don't happen in calm, healthy markets. They happen when volatility spikes and systemic risk rises. So a lot of this systemic risk, I would assume, has to do with the clamor to get physical as fast as you can and as much as you can before something blows, something breaks. We're going to find out. But it says here, this impacts paper traders, not physical silver. It says while paper gets tighter, physical silver keeps moving, delivering, and disappearing. So literally, once this silver is removed from the vaults, once everybody actually receives what they're expected to withdraw from these exchanges here, they're not going back. The silver's not going back. And so one thing I've been thinking about lately is that the demand is coming from multiple fronts. You got the physical clamoring for like wealth preservation that will go in vaults that will never leave again, that will be utilized in a monetary sense as probably collateral because gold and silver are tier one capital for the banking structure. Therefore, they're a different form of liquidity in the midst of a reset. And that's why I always say for those that see gold and silver as a commodity, I think we're looking at it the wrong way because if once gold and silver became tier one capital liquidity assets, collateral for banks, that to me was a sign that we, the people, need to also look at gold and silver as liquidity in the sense of having something tangible in your hand, regardless of what the spot price is, and get ready to evaluate it at a later date in something different. Whether it be, some people say, evaluating how many acres of land you can purchase, how many, whatever you can buy with it in the real world. That's how you will get a better idea as to how much that 1 ounce of silver is actually worth. Okay, well, we talk about tonnage here. So it says less leverage, less paper games, more stress when it matters. Paper market pressure, physical market strength, choose your side. And so, okay, I'm like, okay, that sounds good. But what about the person that's not technical, that doesn't have the acumen to really understand, some of that legal jargon? So I'm like, okay, let me just do it a different way. And so I just simply took that thread and I put it in the language model. And I said, here, explain all that to a fifth grader. So if you want to explain this to your child, this is how you would explain it. And I thought this was very simple, but yet, powerful. So I'll just thumb through it briefly, give it to you from a fifth grader perspective. Because once again, as I'm digesting all this stuff, it helps me to better understand it as well and be able to share it in a way that hopefully makes sense. But says, all right, let's break it down in simple terms. COMEX is a big marketplace where people buy and sell silver futures. That means they're making bets on what silver prices will be in the future, not buying actual silver bars right now. Says, here's what's happening in kidly friend terms. Margin means money you must keep in your account to play in the futures game. If COMEX raises the margin to 52,000, it means traders need a lot more real cash just to hold a silver contract. It says one contract represents 5,000 ounces of silver. So it's like owning a giant imaginary pile of silver for a short term. Think about that, an imaginary pile of silver for a short term. It says raising the margin to 52,000 means each ounce now needs about $10 plus of cash as backup, and that's very expensive. Here's what that means. People who don't have enough money get kicked out of the trade. It says it becomes harder to borrow money to make bets. That's called less leverage. It says what happens? Traders who can't afford the new rules have to sell, and that makes price jumps around even more. So if you can't play along in the game, meaning that you can't up the ante, you can't put more money on the table, you got to basically liquidate your previous trades. So the paper market, trading silver futures on screens starts to shrink because fewer people can afford it. It says here, but the real physical silver, the actual metal you can hold, keeps moving between buyers like factories or inventories. So in short, COMEX raising the margin means the paper silver playground is getting tougher with fewer players. It usually happens when things feel risky and prices are swinging fast. Meanwhile, the real world silver, the bars and coins, become more valuable because it's solid and it's not just an electronic promise. And then it says here, think of it like this. This is a good one. It says, if your school raises the entry fee for a video game competition from $5 to $50, fewer kids would join. That doesn't mean the game disappeared. It just means that only the most serious and the richest players are left. Now think about that. Wasn't that a good summary? It was just very simple. If you can't afford to play, get out. And clearly, in all that, I guess, game. Okay, I would have put. I'm trying to think of like using a video game analogy, and all those are sitting down at the table playing this video game of paper futures. If you can't afford to pay, the whole goal is to eliminate those that are less serious, the weaker hands. And so I'm thinking about this: who are the strongest hands right now that are playing these games? And it's the globally systemic important banks. It's the same banks that I talked about weeks ago. And so for those who are just coming in, if you haven't hit that bell, drop a comment, let me know your thoughts. Because once again, these are just, I guess, paper games on the way to a truer price discovery. And as I'm thinking about this, let me give you something that for those who might be new, you never know who might be coming in. And so several weeks ago, I put together an infographic that highlighted some of the systemic risk. And I'll just grab it real quick, but I'll give it to you straight. So here is that chart I put up. And this is the GSIB hierarchy of systemic risk vortex. This chart didn't exist till I created it, but it represents the total of globally systemic important banks. And it might use some flaws on here, but you get the gist of it. But it's in the very heart of all this where the key players are at. And so at the very center of this, bucket 5, which is the greatest risk to the global economy, JP Morgan is in category 4, bucket 4. But then you got Bank of America, Citigroup, and HSBC, which are some players that are right beneath them. And these are all the players, in my opinion, that have benefited the most in the silver manipulation game for perhaps decades. And so these are I would consider the big players at the game. These are the ones, the controllers that got the biggest and longest bank accounts to be able to actually continue to afford to support these contractual paper games. And if it is true that the paper margins were hiked, and so let me share with you. So we've seen over the last several weeks the increase from, I think it was 11,000, 25,000, and if it is 52,000 now, all that does is minimizes the smaller hands that can't play the game no more. So it's a consolidation of the paper market into the hands of the same people who are already controlling the game. And so if this is all true, then literally we're witnessing like the physical and paper moving forward, but with less players, i.e. smaller people. And so, these are events that I would assume only take place in the midst of a reset. And the reset is literally centered around silver. Because of course gold drops whatever, but gold has already been proven to be a, you know, globally systemic important medium. It's just silver that has been suppressed for hundreds of years. So literally, and so I'm going to put together a video shortly, just talking about some of the narratives, and so how everybody has different angles to how they want to communicate their beliefs slash analysis on what's happening. And there's a common number that I'm noticing that everybody's loving to use, and it's $500 an ounce. And then from what I showed yesterday, if everything plays out the way that I believe it will, it's more so the timing, whether it's a year, 2 or 3. $500 is just it's too conservative. It's child's play, given all the stuff we're witnessing now. So why not just skip all that and just shoot for the big dog? Just go for $1,000 an ounce of silver, because when all of this stuff plays out, once again, it's better to have prepared in your mind these hypothetical worst case tinfoil type of processes that we're experiencing than just to just keep it within reach and within reason of, $150 by summer. Come on now. Because once again, whether it's 150 or 500, more than likely, as I'm describing this, if you have silver as the primary collateral and capital of liquidity for the individual, or we the people, that's still not good enough to make a move with it yet. So you've still got time. So these are some things that I think are worth touching on. But I got a couple other things here that I'll bring up real quick. I kind of hinted at it earlier about potential of the leak that happened on a Friday. And so here we got stock slide, gold and silver tumble after Trump taps Warsh as next Fed chair. So once again, we're supposed to know next week, but it somehow leaked or got on a Friday. Think about that, on a Friday at all places. So here we got here. It says, what I found interesting, says the president is nominating Kevin Warsh, widely viewed as the most hawkish of the handful of candidates, as the next Fed chair. And I'm like, okay, that doesn't really add up. You want a yes man, but if he's hawkish, meaning that he's less QE, higher rates, stronger dollar policies, is like that's deflationary. Therefore, that's going to be a problem. So something won't add up, and this doesn't add up. So once again, this is more of my suspicion as to why everything was coordinated intentionally to hide attention, perhaps, from the COMEX deciding to hike. And so let me just end on this. As I mentioned, let me share something. Let me go back here. So I wanted to just show this because everything I mentioned so far is all centered around information about the COMEX and COMEX. So here is a follow-up to that statement I mentioned, giving all this information about the hiking of the silver margins. So this statement here was found in the comment section, and someone asked Grok if this was true. It says, Grok said, yes, CME Group recently increased margins for COMEX silver futures to 11% of notional value for non-high risk profiles effective January 28th at today's $95 price. It says this is about $52,250 per 5,000 ounce contract. This aligns with the reports of heightened volatility in physical silver. So this is Grok basically backing up the statement that I mentioned earlier. And then it says here, physical silver markets remain unaffected. So if you're holding physical, don't really pay much attention to or overplay the hype and what we're witnessing with this. Let me see here. Let me check it right now. Let me just for laughing giggles, 97.29. And so for those who came in late, I mentioned all this is an illusion in a paper game designed to shake out small hands and confirm and realign the future price in the physical with the rest of the world, which it will inevitably have to do. And I said, look no further than what we're being given. And so this is the spot price as of now. Shanghai ended yesterday at 122. The premium above that is $24. And then India is leading the way right now at $128 for an ounce of silver. And the spread is now $31. So this is real math. So literally in India, 128 is the spot price plus whatever the dealers or whoever selling it to you charges. So it could be 150 for a physical ounce of silver in India right now. And you tell me who's really leading the charge. So that's my case, and I rest. I'll let the judge determine if it's true or not. But anyway, just connected for a quick minute. I got to take care of some other things. Got another video I want to work on. But with that being the case, this is what's happening, people. Hope you enjoyed it. Hope you learned something. Be of good cheer. Love, live, laugh, learn. And of course, all the